Welcome to the investment markets overview for the week ending the 18th of March 2022. The Fed doubled the Fed funds rate this week from 0.25% to 0.5%, citing concerns over U.S. inflation, which is now soaring by 8% per annum. But this is not the whole truth. As can be seen from the lead chart this week, the Federal Reserve may have concerns over inflation, yet they have done nothing in the 2 years that it's been rising. The fact is that central banks, including the Fed, have never made a proactive decision in their lives. They react to market rates, as will be shown within this overview, a week that has included 3 central bank policy meetings. Furthermore, there is evidence that these bastions of financial prudence are the prime cause of actually stoking inflation. The overview includes the performance statistics for the main stock indices, which were higher across the board, as were sovereign bond yields, with Germany leading the way again, whilst the commodities covered and the cryptocurrencies were mixed. Meanwhile, for the regions, the Fed funds rate is shown following the 30-year mortgage rate, whilst the Bank of England is chasing the 10-year yield with scant regard for CPI. Whilst out east, there is an eye-watering snapshot of Japanese market interest rates. So, 2 out of 3 major central banks on parade this week are blaming increased inflation on rising energy costs, whilst the third is blaming wages. A final chart compares annual CPI against the central bank balance sheets for the Bank of England, the European Central Bank and for the Federal Reserve. Note the spike in annualized inflation which, with a lag, have followed ballooning balance sheets. Increasing debt via quantitative easing and by other market manipulation means have lifted asset values including stocks, bonds, real estate and laterally commodity prices. The interest rate cycle is reacting to this excess liquidity, and reacting at a pace beyond the control of the central banks. It's the markets in reality who control interest rates that matter and in fact, control the central banks. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A 1-month trial of this 40 times per year publication is available for less than $15, or the price of just one decent cup of coffee per week. It's an ideal opportunity to grab the bargain discount for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview.